Have you ever wondered how to invest in the stock market directly without picking individual stocks? Ever wondered you can invest in the entire market or a specific sector in just one click? Did you know that there is an investment tool as simple as stock but as diversified as a mutual fund? Welcome to my channel Wealthy Wisdom. In today's video, we are diving deep into the exchange traded funds or ETFs, a powerful investment option that combines simplicity, diversification, and flexibility. I will also be sharing you a pro tip to consider before investing in ETFs. So make sure to watch till the end and don't skip any part of the video. By the end of this video, you will know exactly how ETFs work, how their advantages and disadvantages, and how you can get started with confidence. So let's get started. What is ETF? Let's imagine you wanted to invest in the stock market and generate a good returns. From your friends or family members or someone who is there in the stock market, you got to know few stocks. But back of the mind, you had a doubt. What if these companies are not performing well and you are not very comfortable investing in the individual stocks? You wanted to find a way. Is there a way where I'm going to invest in a group of stocks or a basket of stocks that gives me an instant diversification? That is exactly an ETF. ETF is nothing but a basket of investments that can hold stocks, bonds, commodities, or even combination of these. Instead of buying a individual stocks, you invest in the entire basket. That gives you the instant diversification and reduces your risk of investing in individual stocks. Let's understand with an example. Nifty 50 is a well diversified index that consists of the 50 of the India's largest companies listed on the National Stock Exchange. Whenever you invested in the Nifty 50 ETF, you are essentially investing in all 50 companies from various sectors such as financial services, information technology, oil and gas, and consumer goods, and other industries as well, in the same proportion as their representation in the index. This means your investment is automatically diversified across multiple sectors of the sectors and stocks, reducing the risk associated with an individual stock picking. It also reflects the performance of the India's top companies. What are the different types of ETFs I have? There are different types of ETFs you have. Index ETFs, which mainly tracks the indices like a Nifty 50, Nifty Next 50, or Nifty Small Cap, Nifty Mid Cap. Sector ETFs, which mainly focuses on the industries like oil and gas, finances, pharma, or banking. Thematic ETFs, which is based on the theme. These ETFs tracks the themes like generative AI themes or green energy or electric vehicle, any themes like a consumption and so on. Bond ETFs, which invests in the government bonds or in the corporate bonds. Commodity ETFs mainly invest in the gold or oil or silver. International. So these ETFs invest in the foreign market, and this gives you the benefit of investing in foreign markets without leaving your country. So now let's understand how ETFs works. ETF, which works like a stock. Whenever you want to buy a stock, you will buy during the market hours. Same way, when you want to buy a ETF, you will buy during the market hours. Plus, which is also like a managed fund or mutual fund. Mutual fund is a nothing but a group of stocks and diversified that one. ETF is a combination of stock plus mutual fund. You will get the benefit of diversification, plus you can also purchase like a stock during the market hours. Let's understand the advantages and disadvantages of ETFs. First, advantages. First one in the advantages is low cost. Most of the ETFs are expense ratio is very lower. You can see the expense ratio starts from 0.1% to maybe 0.5% is the maximum expense ratio you can find it in the ETFs. That is the one very good advantages we are going to get in investing in the ETFs that will allow us to keep more of our returns. The second one is the diversification. You are going to get an exposure to invest in a multiple stocks in a single go or in a single ETF. Third one is the trading flexibility. You can invest or you can buy or sell anytime during the trading hours, which is similar like stocks. The fourth one is transparency. Most of the ETFs, I would say all the ETFs, disclose their NAV and holdings percentage changes daily. That offers the investors to get a clear visibility into what are the underlying assets invested. These are the key advantages of the ETFs. Let's understand the disadvantages of ETFs. The first and very important disadvantages of ETF is tracking error. Tracking error is nothing but the error which will occur during the buying and selling. Sometimes due to the market and due to the demand, maybe the price of the ETF not exactly reflecting your underlying index value. So because of that, you may have to buy at a higher price or you may have to sell little lower than the what is the underlying index. Because of this tracking error, ETFs may not perfectly mimic the performance of their underlying index. So this is one of the disadvantages or mainly disadvantages of ETF. The second one is liquidity concern. Even though many of the ETFs are highly liquid, but there are few ETFs may have the liquidity issues. When you face these liquidity issues, you will get the wider spread between the buy and selling prices that will impact your performance, and you will mainly get this wide spread when you are buying or selling the large quantity. Third disadvantages, additional costs. Like we discussed, ETFs are nothing but a stock. So whenever you purchase a stock, it will incur some costs like a brokerage fee, some government charges, some demat charges, even the broker will charge annual maintenance charges. So all those are going to add up to your profits and it may eat up some of your profits. And the final one is ETFs comes with a diversification, but sometimes this becomes a disadvantageous because you are investing in the multiple stocks. If you take a Nifty small cap 250, your ETF, whichever you have chosen, going to invest in 250 stocks. Sometimes this will become a disadvantage because you are investing in 250 stocks that is a over diversification. So these are the disadvantages of ETFs. Factor to select the right ETFs. One of the key factor you will have to consider when selecting any ETF is tracking error. Tracking error should be very minimal. That way your returns are going to be better. So choose the any ETF which has very less tracking error. The second one is expense ratio. Expense ratio, if you choose any index which you wanted to invest, there are multiple AUMs, mutual fund companies, provides the ETFs. You have to choose which is the ETF, even though investing in the same index has the lesser expense ratio. The lesser expense ratio, you will get the better returns over the time. And the third one is liquidity. Make sure that whichever the ETF you have selected, which is traded with high volume, which will help you have the better liquidity. And also, whenever you are purchasing or selling, you will not have any wide range between the buyer and seller price. And the fourth one, which is not very important, but you can consider which index or which ETF you are comfortable to choose. These are the four factors, or I would say first three factors are very important whenever you are choosing the right, whenever you are for choosing the right ETF. I hope you have got a clarity on what is an ETF and what are the factors I should select for investing in ETF. If you have liked the content, please subscribe to my channel and show you love by liking the video. Like I mentioned, I am going to share you the pro tip that you should consider whenever you are purchasing any ETF. So let's imagine that you have decided to purchase in Nifty 50 plus Nifty Next 50 ETF. So based on the factors, you have decided that I am going to purchase Nifty 50 Bs, Nifty 50 Bs and Nifty Next 50 Bs. Whenever you are buying or selling, you have to consider one more thing, which is a INAV, indicative net asset value. So NAV you will get every end of the day or based on the um, stock index movement, you will get to know. But stock, like I mentioned, ETF is nothing but a stock. So when you have a more demand, you may have to pay the more price. When you have a less demand, you may have to pay the less price. Even though ETF is indirectly tracking the index, but at the time during the market trading hours, it all depends on the supply and demand. So that's the reason whenever you wanted to purchase, you need to check what is the INAV value at that time. If that matches with your the val NAV at that time, you can go ahead and purchase it. If it is less, then if you are purchasing, you can even purchase more units. If it is more, maybe if you want to purchase at that time, you can wait until your INAV is matches with NAV. So where can I see this information? This information is going to be provided by those mutual funds, whoever has provided those ETFs in their website. So now I am in the Nippon India Mutual Funds website and INAV page. Here, if you see this particular, so now I wanted to purchase the Nifty 50 Bs, Nifty Next 50 Junior Bs. This is the current INAV and this is the current INAV of the Nifty 50 Junior Bs. If I'm purchasing it, if current INAV is matching with my NAV at that time, I can go ahead and purchase it. If not, maybe I will wait it. If it is available at the less price, I can even purchase more units that will give me the benefit of return. So for example, if you see here, Nifty 50 Bs, NAV, current INAV, both of them are almost matching. But whereas if you see Nifty Next Junior Bs, current INAV is trading at 778, but actual NAV is 772. So I am recording this video after market closed hours. So that's why ideally both NAV and INAV should be the same. If I'm if I'm recording this video during the market hours, then it will fluctuate. But at this time, both should match it. And you see most of them are almost matching except this one. So that means my NAV my NAV is lesser than actual indicative net asset value. So if I want to purchase it, I can purchase more units. This is how you are going to make sure you are not paying extra, or you are taking the advantages of INAV value whenever you are purchasing or selling. I hope you like this pro tip. So with that, I am closing the video, and thank you so much for watching till this time.